every single day. I mean, every day. E-commerce merchants are just willingly turning off their storefront's automation. They step into this hidden, highly manual sandbox, and they basically risk overselling their inventory just to close a single deal.
Yeah, they really do.
Right. They bypass these slick, self-serve pipelines they probably spent thousands of dollars building.
Yeah.
And all because, a customer slid into their DMs or like a wholesale buyer needed a formal quote before accounting would approve it. So today, we are tearing apart the invisible machinery of Shopify draft orders. Welcome to today's deep dive.
It's just a totally different paradigm. I mean, you spend all this time optimizing your checkout flow so the customer does the heavy lifting, right? But with a draft order, you are the one doing the heavy lifting.
Yeah, you're doing all the work.
Exactly. You are building the checkout for them. And the mechanics running beneath that whole process, they're entirely detached from how a standard storefront operates.
Well, our mission for you today, whether you're a store owner or a back-end developer, or honestly just someone fascinated by how online sales architecture works, is to map out this hidden environment.
Yeah.
Based on the documentation and the research we've pulled, we're going to equip you with the knowledge to navigate this system without losing sales, without accidentally zeroing out your stock, and definitely without losing your sanity. Okay, let's unpack this.
So to really grasp the risk and the reward here, we first have to strip away the user interface and just look at the structural concept.
Right, the foundation.
Yeah. Fundamentally, a draft order means the order object exists in your database before the payment does.
Which is backward from normal.
Completely backward.
Yeah.
You, the merchant, are manually constructing the cart. You're the one selecting the line items, manually adjusting the shipping, overwriting the taxes, and associating the customer profile.
You're doing it all.
Right. You build the entire architecture of the transaction, and only after it's fully assembled do you figure out the payment routing.
It's just a massive inversion.
Right.
I mean, building a draft order is like a restaurant where the chef asks the diner to step into the kitchen, design their own menu, set the prices for the ingredients, and only then figures out how the bill actually gets paid.
That is the perfect analogy because it highlights exactly who holds the responsibility.
Like emergence.
Exactly. When you step into that kitchen, the platform assumes you know exactly what you're doing. The software just removes the safety rails. Now, what's fascinating here is how universally available this kitchen is. You might assume manual order creation is, a premium enterprise tier feature.
Yeah, you'd think so.
But it ships on every single plan Shopify offers.
Wait, even the starter plan? Because looking at the feature matrix, the starter plan blocks merchants from staffing their store.
Yeah.
It prevents grouping products into collections. It even locks out the POS Pro subscription.
Even the starter plan. It is a foundational feature. But because it's so foundational, merchants often project capabilities onto it that simply aren't there. For instance, because it looks like a manual invoicing tool, people assume they can use it to set up, recurring billing for offline clients.
Oh, like a subscription.
Right. But the API architecture strictly prohibits this. The documentation is very clear here. Draft orders do not support subscriptions. If you need to put a client on a retainer or a recurring charge, you cannot use this tool.
Okay, so assuming we are building a one-off custom order, the immediate hurdle is turning that database object into actual revenue, right? We have to actually collect the money.
Right, the most important part.
Yeah. And from what I'm seeing in the specs, there are essentially 3 distinct routes to execute the payment. And they aren't just, interchangeable options.
No, they absolutely aren't. Choosing the wrong route can completely stall a sale.
So what's the first one?
The first route is purely manual. You take the payment right there in your admin dashboard. This is really the legacy method. The customer is on the phone reading you a credit card number, or maybe they're standing in your physical shop handing you cash, and you manually force the order state to paid.
Which is straightforward enough.
Yeah.
But the second and third routes are where the digital friction really comes in, I think. Route 2 is having the platform email an invoice to the customer. And Route 3 is generating a raw checkout link that you copy and share yourself.
Right. And deciding between Route 2 and 3 requires understanding the psychology of the buyer in that exact moment.
How so?
Well, if someone messages you on Instagram or TikTok inquiring about a custom bundle, you don't want to use Route 2. If you tell them, hey, great, I just emailed you the invoice you have, just force them to context switch.
Oh, I hate that.
Exactly. You're making them leave the social app, open their email client, dig through their spam folder. That is exactly how a hot lead goes cold.
You've introduced a massive amount of friction. So in that social media scenario, you definitely want route 3. You grab the direct link and drop it right into the DM thread, keeping the transaction native to the conversation.
Precisely. It keeps the momentum alive. But this is exactly where merchants hit the first invisible tripwire.
Ah.
Yeah. So you know how you want to get paid, but what if the platform suddenly revokes that payment option while you're building the quote?
Okay, yeah, let's get into the structural traps because these are brutal. The first one is what we'll call the contact info trap, and it directly impacts that second route, having the system email the invoice.
Right.
I was looking through the state requirements, and the documentation explicitly states that to use the emailed invoice route, a valid email address or phone number must be added to the draft order before it is finalized. You cannot send that confirmation afterward.
And this catches people constantly.
But why? I mean, if I have a standard cart abandonment flow on my storefront, a customer can bake a cart, bounce, and then later pop their email into a pop-up and claim it. Why can't I just build the draft now, save the database object, and append the email address later when the client finally texts it to me?
Well, this raises an important question about how we interact with state machines and software. We are used to the fluidity of front-end web design, right? Where fields can be updated dynamically.
Yeah, exactly.
But a draft order is an incredibly rigid back-end object. You are assuming it behaves like a flexible front-end cart waiting to be claimed. It just doesn't.
It's baked into the back end differently.
Exactly. When you finalize a draft order, the system locks the initial state of that object. The trigger to generate and dispatch the platform's native email requires a destination address to be structurally bound to the object at the moment of creation.
So if it's not there.
If you finalize the draft without that binding, the architecture simply will not allow the trigger to fire later. The button will literally gray out or just disappear. You are locked out of Route 2, and your only option is to scrap it and start over.
That is deeply frustrating. But I feel like it pales in comparison to trap number 2, the currency and terms trap. We're talking about adding a layer of time to the payment process, like B2B payment terms.
Which is standard practice if you are doing wholesale. I mean, you don't want the money today. You want it net 30, net 60, or do you want fulfillment?
Quick sidebar on that, by the way. I noticed in our notes that taking a percentage deposit, say, requiring 50% upfront to start manufacturing and 50% on net 30 is strictly gated.
Oh, yeah, which is infuriating if you're a mid-sized merchant.
Yeah.
Taking a 50% deposit is standard operating procedure for almost any custom manufacturing or bulk order, but Shopify gates that specific math behind Shopify Plus, their enterprise tier.
So if you're not on Plus,
if you are on a standard plan, taking a split deposit on a single draft order simply is not a native capability. You have to hack together multiple draft orders or rely on third-party apps to handle the split.
Okay, so keeping that limitation in mind, let's look at the actual trap here. Imagine you finally land a massive, $10,000 corporate gifting order. The buyer is based in Toronto, so you build the quote in Canadian dollars.
Makes sense.
There are corporate clients. You assign net 30 payment terms. You assemble this massive order, everything looks perfect, and you go to click the button to email them the invoice, and the button is just gone.
Vanished.
You were sitting there frantically clicking around the admin panel while the client is waiting, wondering if you've lacked the staff permissions to send an invoice. But it's not a permission error at all.
No, it is a hard-coded platform limitation, and the documentation is very quiet about this until you hit the error. But the rule is absolute. If a draft order is built in a local currency that differs from your store's primary base currency, and you apply payment terms to that order, the emailed e-voice option is immediately disabled.
Wait, both of those conditions intersecting just breaks the routing.
It breaks the routing entirely. The system will only allow you to collect payment by manually entering a credit card in the admin or by marking the order as paid outside the platform, like receiving a wire transfer.
That's insane.
If you don't understand that the specific intersection of foreign currency and net terms disables the email function, you will waste hours troubleshooting your browser or your staff settings.
Okay, so let's say we navigate those payment traps. We secure the email address early. We avoid the currency collision. We generate the link, and we send the quote to the client. The invoice is sitting in their inbox. Now, a totally new problem emerges. What is happening in your physical warehouse while that digital quote just sits there pending payment?
This is the ghost in the warehouse. The short answer is absolutely nothing.
Let's put a scenario to this. Say I quote a local coffee shop for 50 of my premium custom mugs. I build the draft, I send the invoice on a Friday afternoon, and I leave for the weekend. The inventory is just sitting in my warehouse. But my storefront is still live. What stops a weekend flash sale from wiping out those exact 50 mugs?
By default, nothing stops it.
Really?
When you create a draft order, it holds 0 physical stock. The items on that, quote, remain in the available inventory state across your entire network. If you want to protect those 50 mugs, you have to manually intervene. You have to open the draft and physically click the reserve button.
And if I forget? If I just assume the platform knows I promised those mugs to someone?
If you forget and the weekend flash sale sells out your stock, Shopify will eventually display a 0 stock warning banner on your draft order.
Well, at least it tells you.
But you need to understand that this banner is just a notification, right? It is not a rescue mechanism. It is basically the platform saying, hey, we let the storefront sell all these items while you were waiting. The storefront customer's payment cleared, they get the mugs, and the corporate client you quoted is just out of luck.
Wow. But wait, even if I do click reserve and protect the stock, there is this massive, glaring omission in how the platform handles that reserve state.
Yes, the deletion void. This is one of the most fascinating gaps in e-commerce architecture we uncovered. So you've clicked reserve, we know exactly what happens. Technically, those 50 mugs are moved from the available state to the unavailable state in the database. They are safe.
Okay.
But let's say Monday rolls around, the coffee shop tells you they blew their budget and they have to cancel the deal.
So I just go into my admin and delete the draft order to clean up my workspace.
Well, that is the logical assumption. But the documentation across the entire ecosystem, the Merchant Help Center, the GraphQL references, the inventory state guides, is completely silent on what actually happens to that unavailable reserved inventory when the parent draft order is deleted.
Wait, does the stock just vanish? Do the 50 mugs stay trapped in limbo forever because the order that reserved them no longer exists?
The official resources simply don't tell you. And if we connect this to the bigger picture, it exposes a very dangerous operational habit. Merchants assume modern software is intelligently babysitting their inventory at all times. They assume a deletion triggers an automatic cascade that neatly returns everything to the shelf.
Because that's how most software works.
Right. But a draft order is not automated. It is a highly manual environment.
So you can't trust the delete button.
You cannot trust the delete button to manage your physical warehouse. The only architecturally safe way to handle a canceled quote is to open the draft, manually unreserve the stock, visually verify that those 50 mugs have returned to the available pool in your inventory reports, and only then delete the draft order.
That level of manual babysitting is wild. And speaking of things overriding other things, let's look at taxes. We've protected the physical stock, but what about the legal compliance? Because the tax precedence on a draft order operates on a very strict hierarchical logic.
It does, and it's completely unyielding. When the system calculates tax on a draft, it looks at the database in a specific sequence. First, it checks if you, the merchant, checked the tax-exempt box on the overall draft.
Right.
If you didn't, it moves down to the line items and checks the taxable field for each specific product.
But there's a massive override sitting at the top of that hierarchy, right?
Yes. The customer profile. Think of a customer profile as a massive legal anchor. When you attach a specific customer profile to a draft order, the software pulls in all the legal constraints bound to that anchor.
Meaning what, exactly?
Meaning, if that customer's profile is marked as tax-exempt in your database, it will instantly overwrite whatever manual toggles you just clicked on the draft.
So the customer profile wins. Always.
Always. Because from a liability standpoint, a compliance engine that tracks a verified wholesale buyer's tax status has to supersede a merchant just quickly checking a box on a one-off quote. The database protects the legal baseline over the user's manual input.
Okay, so we've protected the stock from vanishing, and we understand how the tax engine is going to behave. But that creates a completely new problem. You've reserved these items, you've applied the taxes, but how much is the customer actually going to pay for them? Because the moment you pull inventory into a draft, the pricing logic goes completely rogue.
It really does become an alternate universe. First of all, you have absolute freedom. Because you are in this manual sandbox, you can apply a custom price to any line item without affecting the public catalog.
Oh, that's handy.
Yeah, you want to charge double for a rush job, you just type the new number in. You want to drop the price for a friend, type it in. It is totally isolated from the storefront.
But then you hit the concept of price locks. By default, when you are building the draft, the prices are fluid. But the exact second you hit send on an invoice or you generate that shareable checkout link, the pricing on that quote automatically locks in the database.
Which makes sense, right? A price lock protects the buyer. If you quote someone $100 today, and tomorrow you update your global catalog to $120, that buyer's invoice remains at $100. It honors the quote.
But that sword swings both ways. What if I quote them $100, lock the invoice, and then Black Friday hits, and I put the entire storefront on a 30% off sale? The price on their draft order doesn't dynamically drop. They're stuck at the locked $100 while everyone else is paying $70.
Yep, they're locked in.
And worse, looking at the specs, product bundles cannot be locked at all. The architecture just refuses to lock a bundled SKU.
It forces you to be hyper-aware of the delta between your manual quotes and your automated storefront. And that friction really peaks when we talk about discounts.
Oh man, here's where it gets really interesting, because if a customer used a 15% off coupon code on your main site yesterday, they have built up muscle memory.
Absolutely.
They are going to assume that when they open your custom draft invoice today, they can just type in that same promo code, and when they can't, they're going to email you saying your website is broken.
And it's not broken, it's just actively ignoring them.
Yeah.
In a draft order, your automated storefront discounts do not trigger. The system expects you, the chef in the kitchen, to bake the discount directly into the quote manually before you send it.
And if I want them to be able to type a code into the checkout screen at the end of the link, like if I want to give them that option,
then you have to manually toggle a specific permission switch for that individual draft, and it gets worse. The system will not remember your preference for the next time. You have to grant that permission every single time you build a quote.
that is so tedious.
Furthermore, if you are generating a direct link to share, you can only toggle that discount switch from a desktop device. The mobile admin app doesn't support it.
And the ultimate deal breaker for so many promos? The architecture flat out rejects free shipping codes and buy X, get Y codes.
Oh yeah, they won't work.
They literally cannot be processed on a draft order. If you promise a client a BAGO deal over the phone, you have to manually add the free item as a custom line item and manually zero out the price.
Which again reinforces the core inversion. The software assumes that because you chose to build the order by hand, you're taking full responsibility for the final math. It strips away the automated logic to give you control, but in doing so, it creates a massive amount of manual overhead.
So with all this manual overhead managing stock, calculating discounts by hand, navigating rigid payment terms, how far can a merchant actually push this tool? Like if I'm a rapidly growing business, how big can these drafts orders physically get before the platform breaks?
That is a phenomenal question, and it reveals a lot about how enterprise software is built over time. If you try to find the ceiling for how many line items a draft order can hold, the official documentation directly contradicts itself depending on where you look.
I love this part of the research.
Yeah.
If you read the Shopify Help Center under their B2B requirements, it states clearly that a draft order has a maximum limit of 200 line items. But if you are a developer looking at the admin GraphQL API documentation, it explicitly says the endpoint accepts a maximum of 499 line items.
Yeah.
And if you dig into the legacy REST admin API, it states there is no maximum ceiling at all.
Which is enough to make a developer pull their hair out.
Exactly. If the docs say 200 in one place, 499 in another, and infinity somewhere else, how does a technical team actually plan for scale? It's like trying to run a commercial bakery using an easy bake oven.
It perfectly illustrates the reality of scaling software architectures. Over the years, different engineering teams build different API endpoints. A legacy REST API might not enforce pagination limits the same way a modern GraphQL endpoint does to protect query complexity. Meanwhile, the front-end product team updates the merchant-facing help center based on practical performance limits, like the UI freezing up if you load too many items.
So what is the actual truth? What number should they use?
The safest architectural truth is to build to the lowest published ceiling. If you cap your operational limits at 200 line items, you will safely remain inside every boundary, regardless of which endpoint your app or your admin panel is utilizing.
And there's also a ticking clock on the database retention, right? If these objects don't live on your server forever.
They don't. To manage database bloat, Shopify introduced a strict expiration rule. Draft orders created on or after April 1st, 2025 are automatically purged from the system after 1 year of inactivity.
Inactivity being the critical metric there.
Right. Any modification to the draft order updating a price, changing a shipping address, resets that 365-day timer. But if you use this tool to fire off hundreds of quotes to wholesale buyers who end up ghosting you, those database objects won't clutter your admin forever. They will silently expire and delete themselves after a year of gathering dust.
But if they do convert and the client pays, That data is preserved, right?
Yes. Once paid, it becomes a standard finalized order. And crucially, it is attributed in your reporting under a specific draft orders sales channel.
Ah, that's really useful.
It is. That attribution is vital because it allows a business to look at their quarterly reports and see exactly how much revenue is generated via automated storefront flow versus highly manual hand-built sales.
Which brings us to the ultimate reality check.
Yeah.
When should a merchant actively avoid using this tool?
Well, if you are consistently hitting that 200 line item ceiling, or if your sales team is spending 20 hours a week hand-building dozens of quotes because they need specific pricing tiers, that is the architecture screaming at you that you have outgrown the manual sandbox.
The easy bake oven is smoking.
Exactly. Real B2B volume requires dedicated company catalogs, dynamic price lists, and automated wholesale architecture where the buyer logs in and serves themselves. Draft orders are a brilliant manual stopgap, but they are not a scalable wholesale platform. And as we established at the top, you should never use them for recurring subscription models.
Right. So to quickly recap our journey through the back end today, if you were going to step into the kitchen and build a draft order, you must secure the customer's contact info before you finalize it, or you lose the emailed invoice route.
Yep.
You must understand that foreign currencies combined with payment terms will break that route entirely. You have to manually lock your stock, manually calculate your discounts, and manually release that stock before you ever hit the delete button.
You really have to respect the rigidity of the database. The environment gives you total freedom to build the order, but it demands total responsibility in return.
Which brings me to one final, deeply provocative thought, based on the architectural rules we've covered today. Early on in our research, we noted that when you build a draft order, the system allows you to create custom line items. You don't have to pull a product from your existing catalog. You can just type a random name and a random price into a blank field, and the system accepts it.
Because it's designed for ad hoc, on-the-fly quoting.
Exactly. But the documentation states that these custom line items are quietly invisible to every inventory and stock report you own. Because they aren't bound to a real SKU, they don't generate trackable inventory data.
They're essentially ghosts in the reporting engine.
So I want you to consider what that really means for a scaling business. Imagine your top sales rep is out there closing your most lucrative, highly customized deals over the phone. To get the deals done quickly, they're just typing custom line items into draft orders instead of waiting for the catalog team to officially build the new product variants. All of that incredibly valuable specific product data is happening entirely off the books of your main reporting.
It bypasses the entire data intelligence structure of the company.
Are draft orders inadvertently creating a shadow economy inside your own business? Like how much invisible, untracked commerce is happening right under a merchant's nose simply because it was easier for a rep to type in a custom price than to interact with the catalog architecture properly?
It is a profound question about the friction between operational speed and long-term data integrity.
It really is. Remember that comforting, automated, self-serve e-commerce pipeline we all strive for. It turns out, when you step into the kitchen to cook the order yourself, you are responsible for absolutely every ingredient, and you are solely responsible for the mess left on the counter. Thank you for joining us on this deep dive. Keep questioning the software you use every day.